Hi, I'm Cody with Wall Street Breakdown. It is Monday, the 23rd of October, 2017. I hope you're having a fantastic day. My day is going lovely. Thank you for asking. And we are going to get into an earnings recap. So we did have some major companies reporting earnings today, as we're going to have all of this week as earnings season is in full swing. So we're going to go through the earnings of Kimberly-Clark, Hasbro, Halliburton, and T-Mobile. We're going to start off with Kimberly-Clark. Again, if you need to skip to a specific earnings call, we're going to have that down in the description. You feel free to skip to that, but why not listen to them all? Kimberly-Clark earnings per share of $1.60 beat the street by 6 cents. Revenues of $4.64 billion, missed by 20 million, but up 1.1% year over year. Not too bad growth for a company like Kimberly-Clark. North American sales down 3%, and developing and emerging market sales up 3%. So down in North America, not the greatest sign you want to have. They're definitely well entrenched in North America, so to be losing a little bit of market share there isn't a great sign for Kimberly-Clark, but a very, very well-established company. Shares trading at $112.53 to close the day. That's down 0.8%, but that's still, I mean, the Kimberly-Clark numbers, while good, are not what you want to see. The revenue numbers on this should be a little bit more predictable than missing by 20 million. It's those North American sales being down 3% is a significant number. Let's take it in a nutshell for what it is for just one quarter and say that could be, like hurricanes could have affected this. A lot of stuff could be affecting this. Definitely dig deeper, find out if you're thinking about getting invested in Kimberly-Clark or any of these companies. Due diligence is the key. Speak to your licensed professional financial advisor. You know the whole deal. But Kimberly-Clark is a very, very solid company, has been for a very long time. Earnings call, kind of one of those earnings calls. Next up, we're going to do an earnings call from Hasbro. Hasbro earnings per share of $2.05. That beat the street by 11 cents. Revenue of $1.79 billion. That beat the street by 10 million, and that's up 6.5% year over year. Now, Hasbro is having the same problem I think Mattel and Jax and a bunch of other companies are having with the fact that Toys R Us is going under, and it's just, like the places where you distribute your toys, because there's no Hasbro store, are becoming less and less, and shipments are, I would imagine being staggered a little bit going into this holiday season. Even though I know Hasbro through the courts has been guaranteed to pay suppliers up to a certain point, they're going to make sure that's available, but it's still going to make you a little trepidatious to do business with them first as opposed to maybe a Walmart or somewhere else. But Hasbro came out with a great quarter still, I think. US and Canada revenue up 7%, international revenue up 7%, entertainment and licensing revenue up 4%, Hasbro gaming up 22%, franchise brands up 7%, emerging brands up 9%, up. Hasbro, it's all up, and then Hasbro came out and cut guidance for quarter four, which obviously is going to be affected, the Toys R Us thing. I mean, that's a given, right? We all knew that. They were up early market when this earnings call came out, and then they closed the day 89.75, down 8.6%. I don't know. I mean, you can't have much of a better earnings call than that, and the cut in guidance has to be somewhat expected. I mean, we know what this catalyst is, right? Like, we understand why they're going to cut their guidance. They just don't have the distribution ends that they want to have. You're not going to send all the product out there with the hopes that Toys R Us magically finds their way out of this, right? And that you're not on the hook for all this stuff being out there. I mean, you want to make sure you protect your neck. Distribution becomes a little bit more, I would imagine, pared back, right? You end up paring back as one of your major like supply side, the guys that you're selling stuff to end up closing down or shutting down to some extent or another, slowing down at least. Hasbro's being cautious, and I understand that, and the cut in guidance should be expected, and I thought it was expected, but the earnings call in and of itself I thought was perfect. I thought they're doing exactly what they're supposed to be doing. They're growing in every market they could be growing in. The market doesn't know what they like. The market sometimes just doesn't know what they like, but it is what it is. If you're thinking about doing any investing, licensed professional financial advisor, sometimes the market goes down even with a great earnings call. That's just the way it works. Halliburton reported earnings today. EPS of 42 cents, beat the street by 5 cents. Revenues of $5.44 billion, beat the street by 90 million. That's up 42% year over year. 42%. 42% revenue growth year over year for Halliburton. North American revenue growth of 91% year over year. International revenue growth of 4%. They do a lot of business in North America, even though they are a big international company. So 91% growth, definitely attributing for 42% in revenue growth year over year. Halliburton closing the day at 42.24. That's actually down 2.52%, even though, again, a lot of the numbers say otherwise. It seems to be one of those days where we're going to have a tough time winning. And I think this is probably the best example of it is T-Mobile. T-Mobile and Sprint are ready to announce this merger. This is about to happen. We're here in November now. We were hearing around the earnings call time, but there's still a few things, a couple of I's to dot, T's to cross. You know how that stuff goes, right? Like, there's a lot of regulatory mumbo jumbo that they've got to deal with, and they're still trying to work out values and who's going to run what, and there's a whole bunch of stuff going on. But still, the market today just didn't want to acknowledge that anything good was going on because T-Mobile reports earnings, EPS of 63 cents a share, beat the street by 17 cents. Revenue of $10.02 billion in line, but up 7.6% year over year. Net income up 50%. Net additions up 1.3 million, and that is the 18th straight quarter of 1 million plus net additions. T-Mobile kills it. They are in the process of becoming a powerhouse, teaming up with Sprint, and they're killing it still on their end. They have come so far in the last few years. So far, this company is a beast at number 4. And I know they're given a little regulatory leeway to try to make the marketplace a little more competitive and for them to be able to get subscribers that are, leaving AT&T and Verizon and pick up the attrition a little bit from there. And I understand that they're given that. They're not going to be given that if they team up with Sprint. They're going to have that little bit of regulatory oversight that they get, taken back, definitely. And they're going to have to do advertising that's not going to be as aggressively competitive that they're allowed to do right now. But still, they grow because they're a good company. They don't just grow because they're allowed the ability to do some, a little more aggressive advertising. T-Mobile, excellent company, excellent earnings call, just beating it on all the numbers and about to team up with Sprint. 61.47 to close the day, only up 1.67%. Like, it was one of those days in the market. You could have a crazy killer earnings call and still just kind of tick up there. I thought the Hasbro being down 8.6% is just unbelievable. Like, that's not, you can't tell me that earnings call that you weren't expecting that type of guidance to be cut a little bit, and that earnings call, those numbers, you can't tell me that's not at least a break even. You were going into the Hasbro call expecting it to be phenomenal, were you? Because you knew about the Toys R Us thing. How are you expecting it to be phenomenal? Enough that you thought it was overvalued almost 9%. That you had to take it off the table today after finding out everything is up, except the guidance got cut that you knew was going to get cut anyways, right? I don't know. Some days the market just does what it kind of wants to do. It's been hitting record highs all the time. I mean, you're going to have days where great earnings lead to a terrible market still, and you're going to have days with news that is not great at all, and the market still just goes rip-roaring, and that's just what happens. Sometimes people just got to take their money off the table. It seemed to happen on this Monday. I'm Cody from Wall Street Breakdown. If you haven't already, click the subscribe button, click the notification bell, thumbs up for this video, thumbs up for all the videos, why not? And leave us a comment. We love hearing from you. Have yourself a marvelous day.